Hey everyone, welcome to the KE Report Daily Editorial on Tuesday, October 7th. We are chatting with Dave Erfle, founder of the junior miner Junkie. And Dave, we're going to talk about precious metals as we always do, but we can now talk about gold at $4,000 an ounce on the futures market, hit today. This is just a continuation of this bull market that we have continued to talk about. And quite frankly, depending on what time frame you go on, but let's go the whole way back to the last low, which was about 10 years ago, down right near $1,000 an ounce. We are 4x off of that. Interesting today, though, that as gold hits 4,000, seeing a little weakness in the shares. GDX, that's down over 2%. Silver's down today, almost a dollar. Silver has just been volatile, but still very much in an uptrend. But Dave, $4,000 gold price. Who would have thought that we would be here? And look, the stocks have done so well up to this point. What are you seeing in the market?
Yeah, I mean that's the target, right? It hit the 4,000 target. COMEX gold today, Tuesday, closed at $4,002. And what's happening is you're starting to see the miners and silver sell the news of that target being reached. I mean, that was not everybody was expecting it, but a lot of analysts were expecting it. And now you're also starting to see a lot of news headlines about gold, and especially in gold stocks. In Barron's yesterday, gold price nears 4,000, why it's soaring and how it can keep on going. And then in Bloomberg, this on gold stocks trounce AI-led chip rally with 135% gain in 2025. And then this morning, Reuters headline was funds investing in gold miners basking record prices. So we've got the news headlines, we've got the gold 4,000 price target being hit. So we've had the GDX and the GDXJ close above its weekly upper Bollinger Band for 7 consecutive weeks. That's unprecedented. I've never seen that. So all that points to some natural profit taking and some weakness coming in here. So it doesn't really surprise me to see gold stocks off today as gold hits 4,000.
Yeah, Dave, and I think even last week we were talking about how the monthly charts, the RSI is so stretched
Yeah,
at big
over
levels.
90. Never seen that.
Yeah, yeah. So it's not a surprise that we would get to a cool off period. And a lot of times silver and the equities, the precious metal equities, will kind of give the signal. So even as gold is making a new all-time high, they're starting to correct. But it begs the question, what kind of a correction are we going to get here? And nobody knows the answer, but I'd like to get your thoughts because there's so many people that have been waiting for this correction on the sideline so they can buy. So is there going to be a wave of sideline money that comes in and limits the move down? Will it be a correction through time more so than price? What kind of a correction are you expecting here?
Yeah. That's the now $1.1 trillion question, which is now what the US gold reserves are worth. So, yeah, I mean, everybody's wondering, of course it's going to correct, but we don't know when and by how much. There's really strong chart support at 3750 in gold futures and super strong support at 3500 in gold futures. I don't know if it's going to get down there, but with everything, with so many catalysts, so much wind at gold back here. I mean, over the weekend, we saw the French government collapse within 14 hours after being created, after they appointed their fifth prime minister in 2 years, and now and now the citizens are calling for Macron's head, basically. And we've also got the Trump administration threatening to enforce the Insurrection Act in these Democrat cities, and we've got thousands of people taken to the streets across Italy as part of a strike against a flotilla that was taking aid to Palestinians in Gaza that was intercepted by Israel. I mean, 2 million people protesting that. I mean, there's geopolitical unrest all over the world. There's the debt situation continues to get worse with no intention of ever paying any of it back. So, sure, there's going to be gold weakness, but that question is how quick is it going to be bought, and how low will it go before that weakness is bought? Like you said, no one knows.
Nope, no one knows. But let's talk about the stocks then, because look, we've been talking about just how well the stocks have been doing. All started with the majors and then the better mid tiers and then the juniors over summer who have raised just boatloads of money. what are you going to do in your portfolio if you think a correction's due? If it does feel like it's getting overheated, you keep telling us you're in the stocks that you like and you trim once it gets to 2 or 3x your position, but you'll still hold some. Do you try to get cute here and trade this market, or do you simply ride out a pullback, understanding that it's still a bull market depending on how deep the pullback goes?
Yeah, I built a decent sized cash position, but last evening I actually sent out a buy alert to my subscribers on a under the radar early stage, pre PEA stage junior that has 3 million ounces in one of the best mining camps in the world, and a strategic partner. They just raised a bunch of money and they're trading at $20 an ounce on the ground. So I'm like, I'm buying this. I don't care if the sector needs a correction, because there's still a lot of juniors that have a lot of catching up to do. I mean, a lot of these juniors are still trading at 50 to 75 to 85% below their highs reached in 2020 when gold was trying to break 2000. So even though the GDX and GDXJ, the mining sector, is overdue for a healthy correction here. If you take a look at the TSX Venture, it's just now reached multi-year resistance at the 1,000 level. There's between 1,000 and 1,100. There's major resistance there, but it's a huge 18-year inverse head and shoulders bottom. That is, I mean, just really something to get excited about, because sure, some of the juniors also are due for a correction here, but there's, like I said, there's still a lot of these high quality, earlier stage, higher risk juniors that still have a long way to go as far as catch up is concerned. I mean, I think the average price of gold in the ground is going for about $60 right now. And there's still a lot of these juniors, and fortunately, I have a couple of them in my portfolio that are trading at less than $30 an ounce in the ground. So there's still some opportunity out there, even though the sector is due for a correction.
Well, Dave, I'm glad you went there on what the ounces in the ground are being valued at. We've talked about this before, but it continues to just stun me that we are seeing margins on these producers. I mean, we just had the highest average quarterly price of gold and silver in Q3 that we've ever had on planet Earth. So these producers are printing money, but a lot of them are going to have $1,500 to $2,000 margins. That's insane. And yet we're valuing the next batch of cookies in the oven to come out, the development projects at $30 an ounce, $60 an ounce. I mean, even if they were valued at $300 or $500 an ounce, it would be a tiny amount compared to what the producers can make if they develop it. Now, I know that there's capex cost and all kinds of other things to take into account, but do you think that even if gold pulls back, that some of these developers could keep rating higher when people start doing the math on these economics?
Absolutely. I mean, yeah, I mean, it's crazy to think about it. Like you said, how cheap these ounces are going for right now, especially when you consider what majors were buying them for at the top of the last bull market for $1,000, $1,200 an ounce in the ground. And at that time, they were uneconomic as gold was trying to push past $1,800 an ounce. Now, like you said, these mining companies are just printing cash. I mean, if you take a look at Newmont, I mean, they posted free cash flow in Q1 of $1.5 billion, in Q2 1.7 billion, and now with the gold price, like you said, going up so much in Q3, I wouldn't be surprised if Newmont in 2 weeks, when they announce their Q3 results, probably are posting free cash flow of over $2 billion. So yeah, it's just incredible the opportunities that are still out there, even though the mining sector as a whole is so extreme overbought and due for a correction.
Really just comes down to stock picking, though, right? I realize that the shotgun approach has worked recently because everything has moved higher. But if you can go out there and find some of those stocks, even if they have moved higher, but offer that sort of value, right? And we're talking about companies that have resources, some that have PEAs, some that have even further economic studies. But that also brings up the big question as to the value for ounces in the ground that you get is really what the market and, more importantly, what majors are willing to pay for them. Majors have still been focused on big deals, big transactions, kind of like the rest of the market. We're just seeing major transactions in all kinds of sectors, but not so much down into the smaller stocks. So, has the market changed in the sense, Dave, that we can't depend on the majors and these juniors or mid tiers, if we want to call them that, they're going to have to build these things themselves?
Yeah, it looks like it, and a lot of them are going through the motions that they are, especially some of these silver juniors, because as we've seen, a lot of these single asset miners go off the table and be gobbled up by mid tiers and majors. And I think they're looking at the next tier because you look at companies like Vizsla, which I hold in my portfolio and that I cover for my subscribers. They've already raised enough capital to construct to begin construction of a mine before they've even released a definitive economic study, a definitive feasibility study yet. And you have another miner, a silver junior this morning, another company that I cover in my newsletter that I own shares in, Abra Silver. They just announced a bought deal where they raised a bunch of money. I wouldn't be surprised if it gets upsized either later today or tomorrow, where they'll probably have the equity portion to construct their Diablios project. They'll probably have the equity portion in cash already before their definitive feasibility study comes out later this year. Then all they'll have to do is get a debt package, maybe sell a stream on some of the gold or what have you, but then they'll be fully financed to construction. So yeah, I mean that's what a lot of these companies are. They're showing the market that hey, we're hiring the people we need to hire, we're raising the money, and we're going through the motions that we're going to build this thing ourselves.
Well, Dave, just to that point, I mean, those are both quality companies, and we cover those here at the KE Report. And I should disclose I'm a shareholder of both Vizsla and Abra as well. But even in the gold space, we're seeing a lot of companies going through the motions to potentially build their own mines. Do you like seeing that where they staff up and bring in the right teams, or do you think it's still sort of a bluff that they hope that a major or a mid tier, in a lot of cases, it's not going to be the majors. It's only a dozen majors. People have to quit relying on the majors and look at the several dozen mid tier producers that actually could build some of these projects. Do you think it's a bluff to get them in the mix and say, hey, whoa, 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 before you go any further, let me just take this over and build it the way I want to?
Well, it all depends. I mean, if they're hiring quality people and and they're going through the motions of getting the financing together, they're going to build it themselves. So I definitely like to see that. I've seen that in several of the companies that I own, and I like to see it, and the market rewards that.
What about that whole Lassonde curve, though? It does take time to build these projects, and these guys do need to shift their capital, their growth profile or outlook towards building these mines. Do you hold through a multi-year build?
Oh, absolutely. I mean, you just look at my largest gainer this year in Montage Gold. We got my subscribers and I got into that stock below 50 cents, and it's been a 10 bagger for us. And we got in, before they had a feasibility study, and we've held on to it and trimmed profits while they've raised the capital and started to constructing the mine. And they just put out an update this week. It's on time, under budget, and they're going to be pouring gold in Q1 of 27. And they're also looking for more and finding more. So this is a fantastic stock. This is a fantastic company to look at if you're thinking of trying to get cute and time the market and get rid of something that, hey, this is in this part of the Lassonde curve. I'm going to go ahead and sell it, take all my profit, and then put it into something else that's earlier stage.
Well, Dave, actually, the second wave of the Lassonde curve is the construction phase into first gold pour, where Lobo Tigre study, the pre-production sweet spot, that most of them double during that period of time. So it's actually the second wave of the Lassonde curve that you want to be a part of. So when they're getting to that point, would you then sell at first gold pour? Because I'm also thinking of companies like Skeena that's going to be constructing, or they're already in construction on some of their infrastructure on the mine site, and they've raised their capital stack. Troilus is getting pretty dang close. They've raised their capital stack. They're already doing some early stage work. When they actually go through that Lassonde curve and re-rate higher before first gold pour, do you then sell on the first pour, or do you hold into production?
Yeah, I mean, I hold both those stocks and cover both of them in my newsletter as well, and they both still need that EIA, right? That's what they're waiting for. Skeena is pretty much fully financed to production. They just raised more money this week to top up, but they're waiting for that EIA. And Torlis is, as far as selling it and getting to something else, no, I'm still holding. I'm still sticking to my strategy of selling a third when it triples and holding for a possible takeout. I'm not going to sell the stock if they do go ahead and go through the build and start first pour. It all depends on market conditions, of course, and it all depends on what the company's doing. But I've taken my risk capital out and I'm just going to hold.
So, Dave, curious because it's what we're hearing from some other people too, and even what I think Shad and I are looking at is that taking some of the profits from precious metals stocks and rotating into some of the other resource areas simply because we know resources, some of the ones that haven't run as much. So, in your portfolio, have you noticed any shifts in allocation towards precious metals stocks versus other stocks?
Well, yeah, I'm still sticking to gold, silver, and copper. Those are my main metals that I'm focusing on. And I've said before, I've looked at copper stocks more. I got into a copper junior recently, and that stock is doing really well since we got into it. And just going down the food chain and into the higher risk, higher reward companies, because that's where the value is now. Like I said, this is pre-PEA stage or PEA stage juniors that are kind of under the radar. Maybe they've just got a strategic partner or they're looking for one, or they just put out a mineral reserve, an MRE or an updated MRE, and showed the market, hey, look at this thing, it's fantastic, it's going to show good margins when we put out the PEA, what have you. A lot of these companies are still trading at depressed prices and they're still below under the market radar.
Well, Dave, with gold at record prices, and it has the propensity to attract better quality management teams into a lot of stocks, but there are way more stocks. There's like 1,000 gold stocks, and silver, maybe not having that central bank buying, maybe not as big a teams and not the quality A teams, but the potential for high torque. If somebody was listening to this and they're on the sidelines wanting to get in on this pullback, would you be more tempted to weight them towards gold or silver stocks?
Yeah, I mean, I really like silver here. I mean, just looking at that chart, looking at that 45-year cup and handle quarterly close breakout, I mean, that is super sexy. And as far as the upside is concerned, I mean, look, the gold price broke out of a 13-year cup and handle. We thought that was massive. And I said that, hey, this is going to 4,000 probably within a couple of years. And it did so in 18 months. What is the silver price going to do after it's now broken out of a 45-year cup and handle? I mean, the gold price just recently finally got above its CPI adjusted all-time high from 1980. Its silver needs to get over 150 to do that. So a 45-year cup and handle breakout is just, monumental. So yes, I got myself and my subscribers in very early to 14 juniors that have high leverage to the silver price in my portfolio. So yeah, I mean that's definitely an area I'd be looking at right here on any pullbacks.
All right, Dave. We'll wrap it up here. Still, it sounds like lots of opportunities out there in the precious metals space. Yes, a lot of people calling for a correction, but bull markets can sure go on longer than a lot of people think. And that's the definition of a bull market is continuing to be overbought and continuing to push higher. I'm sure everyone has gains in their portfolios trying to figure out what to do with those gains, but quite frankly, riding the bull is usually the best strategy and it provides the best returns. Again, Dave Erfle, founder and editor of the Junior Miner Junkie. Click the link in the show notes to follow along with what Dave is buying and selling. Thanks for your time today, Dave.
Thanks, guys. Always a pleasure.